The turmoil in global financial markets, which started with the collapse of the $200 billion Silicon Valley Bank, is having major implications for the outlook for the global economy. In particular, what it means is that regional banks along the lines of the Silicon Valley Bank are going to come under much greater regulation, are also going to be under significant deposit threat, and rating agencies will be looking very closely at downgrading these banks. But these banks are incredibly important. They represent 60% of residential property loans, 45% of consumer loans, and about 50% of commercial loans. So as those banks come under pressure and tighten credit, so the Federal Reserve will have a lot of its work being done for it. As a result, we've lowered our forecast for the federal funds rate by 50 basis points, and we're also expecting to see the Reserve Bank pause at the April board meeting. Financial market turmoil and slowing data will provide the bank with an ideal opportunity to pause, and indeed in the minutes from the March meeting today they indicated they'll be considering that. We still expect growth in the Australian economy to be quite soft this year at around 1% and only lifting to around 1.5% next year. But next year we'll lay the foundations for interest rate cuts, with inflation coming down, growth being quite weak, and we're expecting to see the interest rate cuts to begin in the March quarter and to extend all the way into the middle of 2025, with a total of around 150 basis points of cuts.